Just in time, I was able to find Brian Wang because Larry Goldberg is, I guess, driving across Texas or some part of the country, and I was unable to find Larry. So you're going to have to put up with Brian tonight. Oh, no, no, you're going to have to enjoy Brian's different take. Although who knows
Mhm.
how different it'll be. Thank you, Brian, for coming on. I
Thank
really
you. Yeah,
appreciate that. All right.
good to be
Listen,
here.
nobody in the world can possibly claim that Reuters might now have their knickers in a twist over
Mhm.
Doge,
Right,
having been, of course, called out on their USAID problem.
right,
Um, but they already hated Elon before. They hated Tesla. They were
right.
never giving him a break. But how about this headline today? Tesla recalls 376,000 vehicles in the United States over power steering and shares drop.
Okay.
Now, if I'm a casual reader, even maybe kind of an interested reader, I'm going to think, boy, that is a brand new piece of news. They're going to have to call all those cars back into the factory. They're going to have to work on them. This is a real problem that they should have corrected this themselves, and
Mhm.
the shares are going down, so everybody gets that this is a horrible problem.
Right.
Okay, what do you think this is really the case?
They probably repeated a story from a year ago or something where,
October.
yeah.
So this was originally Tesla
Mhm.
told Nista that they
Right,
were going to do the recall,
right,
not the other way around.
right.
In October, Tesla has finished the recall, 99%
Over the update something or
over the
they,
air update.
right.
And so they turned in the paperwork yesterday.
Hmm.
So that's what
Yeah.
this was about.
Okay. Yeah.
Now, I don't know. Would you call that misinformation, disinformation, good
Yeah.
reporting, bad reporting?
I think it's the bad reporting, misinformation. Right. And it's basically, um, they received millions of dollars, as we reported in the USAID thing, to provide information for a particular side,
Right.
right? So no unbiased journalism from them, which this is the case.
Well, also in the news today, I reported on it this morning, but it's been talked about all day on X. I'm sure elsewhere too, is that Nissan, who didn't like the Honda offer, is now shopping their company around, seeing if they can find a buyer and or a buyer or an investor or something. And it was suggested that maybe Tesla, maybe Elon would be interested so he could pick up. No, you don't think?
No, no way. You don't take the most efficient tight team to take on third rate, fourth rate guys who are messed up, who don't get it, right? You don't want to take, it's like Ford in 1920 making Model Ts doesn't say, I want that buggy whip maker. I
Yeah.
want them to get their employees are so good, I'll bring them in. You don't want that.
Yeah. Okay. So you think that this is probably a non-starter? You
Right.
think, okay. I just wanted to
It-
be
uh,
sure. I mean, that was
but
my
think,
impression.
but Nissan is particularly dysfunctional because they did some um, merger joint venture thing with Renault and
Yeah.
with some other companies. And then they had a CEO who was leading them. And then the Japanese got pissed off and they tried to arrest that CEO. They threw him in jail. He had to sneak out of the country in some kind of like container box. So the thing is, because they just resisted. We don't want change, because he was like trying to, rationalize their finances and on, right? So for the sin of trying to fix their company, the other executives revolted and got him tossed in jail with Japanese courts, right? So that company is totally messed up. So to say, okay, for any other company to buy them,
Yeah.
it's like,
Yeah.
oh, we're going to buy them. Oh, let me and the executive come over to your company and do something. And it's like, hey, we don't like you. We're throwing you in jail,
Yeah.
right?
Yeah.
And then and we'll watch the boxes this time, so you won't be able to sneak out, right?
Yeah, right.
You'll be in prison until you agree to do what we want. It's like, so Nissan is particularly talks it to another level. So
So speaking of companies that are mismanaged, not as bad as Nikola, who is
yeah,
now bankrupt,
right.
who we all predicted would be bankrupt, and actually a company that I think most people in the Tesla community have kind of been cheering on a bit. But
Not me.
Rivian now is guiding to lower sales in
Right,
2025, still not making a profit,
right.
is now, according to AJ, the company that has built up the largest amount of losses of any company,
Cumulative losses.
cumulative losses of any company in history,
Right.
25 billion or something, 24 billion. So what do you think? Do you think Rivian is going to make it?
No, no, I don't
No.
think they'll. No, I don't think they'll make. Well, they could sell some technology, I guess, to Ford. Because they have trucks and SUVs and that kind of stuff. So in theory, they could sell some level of stuff, but it will be, I think, pennies on the dollar. Why would someone overpay for that? You know, but it does have some value. So there's some pieces of things that might be useful to some company.
But not $25 billion in
No,
liquidation.
no, it's gonna be pennies a fire sale, pennies on the dollar is my thinking.
Okay, we've got Rebellion Air guiding to 350,000 cars in the
Hmm.
first quarter.
Hmm.
You've got Troy at 300. I'm sorry, Rebellion Air is 350 to 375 to give them to be clear. Troy's at 370.
Hmm.
AJ's at 425. The Street's at 427.
Hmm.
AJ believes it's 425 because he thinks that maybe they got started on the Model Ys in time and they can get ramped up pretty quickly. Anyway, have you thought about the first quarter yet at all? Do you have any thoughts about where you think it?
I'm expecting it not to be that great, but in terms of, for me, it's not the overall number.
Okay.
In terms of like the cumulative number over 90 days.
Right.
Quarmaris to me is seeing China at 20,000 per week,
Oh,
25,000 per week, where they're back to
right. Max out.
Model Y at full production. Whether that happens, in 3 weeks or 4 weeks, I would like to see it happen. I guess in 4 weeks. I want to see by the end of March that they're back to a nice 20,000. So that means like 5,000, 6,000 Model 3s,
Mhm.
15,000 Model Ys. That's what I want to see. I want to see that run rate back
Mhm.
up,
Mhm. Mhm.
right? And it's going to be, we'll see that numbers with China first because they report weekly numbers, right? And they also give um, a monthly production.
Monthly production.
So they give a monthly production with deliveries
Mhm.
every month,
Mhm.
and they give weekly insurance registrations.
Right.
So we'll be able to see what's happening to the Model Y ramp from that. So that's what I want to see, not exactly how they get to that ramped up thing. I want to see them ramped up because I view that as a gatekeeper to releasing the low cost next model.
Model. Okay.
That they need to have
Mm.
Model Y ramped
Mm.
in the bag,
Mhm.
and then they do the next one. One, not just because of factories and like that, is because they have to have suppliers ramped
Mhm.
up.
Mhm.
The,
Mhm.
the, the suppliers will be using parts similar to,
Mhm.
I don't know, 60, 70%, whatever, of the parts of the Model Y. So they need to get ramped up. So
Gotcha.
it's like I'm running here and then I'm keep ramping because I can make more parts for the next vehicle. And that other vehicle could end up having 2x the volume,
Right.
3x the volume
Right.
because of the cheaper version of a Model Y or something like that, right? So they need to keep that ramp going. So I would like to see that. So seeing the ramp in late April or May start for that next vehicle is dependent upon them getting this thing wrapped.
Got it. Got it. Yeah, and they never really ask questions about the individual sales of cars at the earnings call. But this time, just because I'm a product guy, I would like them to break down and talk to us about how the Model Y is doing,
Mhm.
in terms of sale. We're only going to have a few weeks of information because it's just a March and maybe a week of February and all of March is all they're going to really be reporting on April 2nd. So by the 20th or 22nd, 23rd, whatever it is of April, they could let us know how are the orders looking. I mean, we can look in the thing and it says, well, you can't get your car until June. That would be a pretty good
Right.
indicator that things are going well. But it'd be nice if they gave us some color this time, I think, on the
Right.
Model Y in terms of the reception.
Right. I would expect they may not be specific, but they'll say is, you know, demand is strong, blah, blah. So there'll be, I think, generalities around that. Um, so I think they will answer, but probably not the detail you would like.
Yeah, yeah, right. Exactly. All right. On the general economy and the Trump administration, 31 days in the bag. They've been going strong. Everybody's talking about the speed of their operation, the quickness with which they're doing all these things. So you're a futurist, and I'm a little mini futurist, and sometimes I get it right. And I said that the first month would be chaos. Do you think I got that right?
That was a slam dunk.
Okay. And now and now I'm calling the current mood among businesses, consumers, and investors. They're all in the same mood right now. They are uncertain.
Mhm.
I'm also think that the chaos will not end, but it will tamp down a little. They've done all the really giant big things. They've created a lot of energy. They got a lot of people in place. They got the cabinet almost 100% filled out. I think there'll be less chaos in the rest of February and all of March, but there'll still be chaos. And I think there'll be uncertainty. And I think the uncertainty is going to take about 60 days to really tamp down. What do you think?
Um, so there's still big stuff in terms of the bills, the House bill, Senate bill that are coming through.
Right.
Um, Trump has said he supports the House bill, 4.5 trillion in cuts versus 1.5 trillion for the Senate. Um, so getting that through um, and doing something big like, say, ending the Ukraine war, right? Those big deals would resolve certain uncertainty,
Right.
right? Because they would be major milestones. Because right now it's like there's still people thinking that they can resist it, stop it, do whatever, right? So once those more permanent things happen, then that will, um, make the accomplishments clear,
Mhm,
right?
mhm.
That so beyond the executive order phase, which can be viewed as temporary, that hey, they could, you know, resist fight in court, that they can, you know, if that was all that happened and you came in 4 years later and won the election, then you can reverse them,
Right.
right?
Right.
So having things permanent would also policy wise say, here's the new laws, right? Here's the new rules. So then for business, they would say, okay, oh yeah, this is in writing, clear. I can study and analyze it. I know exactly how this plays out, right?
Mhm,
So
mhm.
that goes to reduce uncertainty. In terms of like the big thing happening, you know, I think the there will continue to be, the bulk of it will happen in the next 5 months. And then certainly, as you said, within 3 or 4, a bunch of these big things happen. And so it becomes clear the next 2 months after that just follow through, right?
Right. Right.
So that means, but I think it'll be quite clear and quite helpful to the economy, within say 60 days. Each month there'll be a lot of action that will make it more solid, more known, you know, and for us predicting it, like we're following it, we're looking at it in detail.
Mhm,
For the regular people, it
mhm.
will be more easily understood. It's like, oh, this is what's happening,
Right.
right?
Right.
Then that will there'll still be a big change, but once it's clear, oh yeah, this is happening. Like I still see other futurists debating, will they cut 250,000 employees out of the 2.4 million, 3 million people? And then I'm like 99% yes, it's going to happen,
Yes,
right?
yes.
Like there's 220,000 probationary employees, 77,000 took the bonus. Like it's
It's already
already
done.
over 300,000, right? But then there's people even who look at it who don't want to accept the
Right.
number.
Right.
And then there's another like 300,000 non-essential workers, right? Who
Right.
got furloughed during COVID, right? So that's a number that can go. And then when the bills come through, various agencies reorganize, blah, 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 there could be some big things like privatizing U.S. Postal Service,
Right.
privatizing Veterans Administration. That's like 1 million jobs, right?
Right.
So there's these big things that will happen that I think is, looking at what they're actually doing is like, this is clearly what's going to happen, right? But other people will wait until and be shocked when it does.
Well, we've had quite a few positive results from the judges,
Yeah.
and we did have the Senate and the House have both passed bills. I
Mhm.
don't know if the House has passed both styles of the bill, the Senate bill and their own bill. They've definitely passed their bill, and the Senate has passed their bill. But I don't, and I know that Trump said this morning he congratulated the Senate on passing the bill. He didn't say, "Okay, we can go with that bill now," but he did congratulate them, even though he doesn't like it as well as the House bill.
Right.
So I think, like you're saying, is things are going to become more clear. I just have a feeling, my sense is that this uncertainty is gonna last, because I know another reason why I think the uncertainty is there is not just because of the chaos, but also because when you have this many moving parts, not you and me, we may be able to see the future.
Right.
I may be able to say, well, all of those moving parts look to me like they're going to come down with sunny weather.
Right.
But somebody else could look at the clouds coming in over here and look at the lightning that's going on over here and go, man, that looks to me like we could still be having a storm 6 months from now. And so I think as it's going to take a while before the impact of the tariffs or the impact of the cuts or the impact of the changes in regulations, et cetera,
Mhm.
all of those impacts to start showing up to where even the sophisticated economists can say, okay, looks like okay, this seems like my work.
Right. Right. Yeah. So I think, yes, there's certain big things that I think will um, move things along. That the once the bill gets through, like I've said, um, I think that the peace deal with Russia and Ukraine will happen,
Mhm.
and that people don't understand that that is a huge economic impact when
Right,
that happens.
right,
So not just the fact that you're not giving $100 billion a year for weapons,
right.
right? Not just that you're. So the other thing would be that you're the three critical products that are impacted. There's more, but the three most important ones for everyone's pocketbook are natural gas, fertilizer, and wheat. Okay, so when the war is over and then Russia is able to produce more fertilizer again. Right now they're down to like 18 million tons. They can produce 25, even 28 million tons, right? Just not
Mhm,
even go into details,
mhm,
take my word for it. I've done the analysis. Okay. So that means you can drop fertilizer prices down from
mhm,
$400 a ton
mhm,
down to $300 a ton
mhm, mhm,
and get more supply.
mhm.
They supply Middle East, Africa, Europe for that stuff, right?
Right,
And then it affects globally because if I can't buy from them, I got to buy from
right.
someplace else, right? So dropping that price means that crops, wheat and corn, are use a lot of fertilizer,
Mhm.
right? And also use natural gas, and natural gas would also be improved with that. That means that for the average American, your your bread, your milk, because corn is fed to cows for
Mhm.
meat and for milk. So your grocery bill would drop by about $350 per year, right?
Mm.
which people think, oh, $350, only 350. That means your grocery bills are free for 1 month.
Yeah, right.
Okay. So you got a discount on that. The other thing is if you add up 4 years of 350, that's $1,400. That is the size of the largest of the three COVID stimulus checks.
There you go.
Okay. So this would impact things. And then taking out that 5% cost, that's like 2 years of grocery inflation.
Mhm.
People kept saying, well, it's impossible to bring the prices down. We can only slow the growth. No, you can take back 2 years, right?
Mhm.
2 years, that matter. Other countries, Egypt, based on their imports and how they do stuff, 15% drop in their food costs.
Wow.
Nigeria, Africa, 10% cut in their food costs, right?
Mhm.
And they have more supply. For USAID and various other agencies and charities, they donate a lot of American money to feed the poor countries.
Right.
If they got 10, 15% more food and cheaper food, we don't have to give them there. So I don't have to pay for the shot that breaks the milk bottle. I don't have to buy more expensive milk. I don't have to clean up the spilled milk. I don't have to buy milk for someone else who no longer has milk. So we're paying for this 4 times, right? So we're going to get back the 1,400 with cheaper stuff, and I don't have to pay someone else, 50 billion, 100 billion. It's like, oh, you're taking the money away. If I make it cheaper for them, I don't have to pay
Right.
them,
Right.
right? And no middlemen are stealing the money, right? So this is a, $500 billion impact. It's the $1,400 that will come straight back to our pockets for 4 years
Right.
and ongoing every year, $350. But it's also less interest because we're paying everything. The wars, like the Iran-Afghanistan war, $6 trillion. That was on credit card.
Yeah.
That's now $10 trillion of our $37 trillion debt.
Yeah. Right.
The Ukraine war, $300 billion. We're not paying any of that back yet. We have to get all that debt down. So that means we keep rolling this on our credit card.
Right.
So all this, we're so generous. Everything is on credit card right now. Everything that we're overspending, we're doing it on debt, on credit card.
Yeah.
So this is why it would end up without these big changes by the 2030s. My estimate would be like 2035 that the US financial system would blow up.
I see.
Hyperinflation, it would be a big wreck. And again, history people don't know it. Hyperinflation is when you are rolling your money around in a wheelbarrow.
Right. 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 Right.
You're buying your groceries with a wheelbarrow of money.
Right.
Right. So it's Venezuela.
Right. Right. All right. So we're in rough agreement that we're going to continue to see chaos. We're going to continue to have a period of time where there's going to be some confusion, even among the experts. They're still going to be uncertain about how all this is going to work out. And as a result of that, I think the stock market is going to be a little flattish. And we'll talk about the stock market in a minute. But before that, I want to talk about the underlying economy. So going right after the election, going into January, even all through the month of through most of the month of January, we saw tremendous optimism among business. We saw optimism among the folks. We saw optimism on the stock market continuing to hit all-time highs. But in the last week, we've seen that optimism come down. So we've seen signals today of the services side slowing down a little bit. Actually, manufacturing picking up a tiny bit. That was good news. But we saw optimism. The optimism indexes even though they're still optimistic, they're less optimistic than they were. We saw more people thinking that inflation is going to go up because they've been hammered, that tariffs are going to cause inflation. So we could get a little self-fulfilling negativity going here. All right, now let me play it out. We're going to cut $1 trillion from the economy. Oh, wait. I thought we were cutting $1 trillion from the federal government. Oh, yeah. But that's part of the economy. So we're cutting $1 trillion from the economy. No, that's not going to be in 1 month. It's probably really not even going to be 100 billion per month for months to come. Maybe it'll be 10 billion next month and 20 billion the following and 30 billion. Someday it'll get to 100 billion. So, but it's still going to have an impact. There's going to be local suppliers who were supplying these people with pens and paper, and because they don't use computers, they were supplying them with lots of pencils and pieces of paper to these government employees. They were, they were providing them services, et cetera. That's all going to go away. So the argument that's been going on all week has been, does the economy, does the interest rates come down fast enough? Does the optimism get turned around fast enough to avoid a recession? Or does the kind of negativity that's going on happen faster and we actually have to go into a flat spot or a little bit negative?
Um, I would think could be a little bit negative. So the issue is that when you do these deep cuts, that if there's in history, World War II, you demobilize, that's when you had big cuts. World War One had deep cuts because you stop spending everything on war, right? You're spending like 80% of your money on war, and then you stop spending that, so then it's a big drop, right?
Right.
And then you have to like move people over to the peacetime economy. Um, World War One had an 8 month steep decline, and then a V-shaped recovery. Eight
Right.
months, boom, up and down. Uh, World War Two had a drop too. I think about 2 years-ish, but then they had a roaring economy.
The 50s.
So the 50s, right? So, and then even before that, like 48,
Right.
49
Right.
is
Right.
already starting to rip. So, so we know how that works. The other thing is that we have the tools now, the stimulus checks, the Doge dividend that they talked about, to apply that first. So you say, okay, we're going to save the trillion. We have it in the books. We got to get you people a Doge dividend. I described the war dividend being 350, $1,000, but per year, but then getting a Doge dividend of $5,000 would then offset things. So then that would, boost the economy. Um, but then the recessionary effects would take down interest rates, right? So then if you have a slowdown and inflation starts dropping because of this dampened economic effect,
Right.
then so then how did the market read that? If I have some cuts in the past, they said, well, you're cutting because the economy's weak,
Right.
right? So do they look past this and say, well, the economy will be strong because we made the cuts and we have the room to put in pro-growth policies. You um, cut the taxes on tips, maybe
Mhm.
with a cap, so people don't rip it off, and then you cut taxes for Social Security and pensions, right? So then old people can spend more. So there's various things you can, but the big ones would be um, if you can reform it into a flat tax,
Mhm.
18% flat tax versus a 20% flat tax with a nothing over 30,000. But that would be big legislation, which
Right.
I'm not sure that the House and Senate can pass,
Got it.
right? So you end up with smaller stuff. It may be something that if you won the midterms, you could go to that. But,
Mhm.
but going to this year, um, I see the great economy and the great thing they can do, making it solidified where the House and Senate, whatever the plan they do, and they have to have more than one bill, right?
Mhm. Mhm.
Where they get a couple of things in there. It's like, how do they codify some level of stimulus? How do they codify some simplification that's pro-growth, right? Um, and so that's the question. So then how they react to it is with what's actually in the bill.
Yeah.
I'm hopeful that it'll be in there because the plan is good. It's a
Right.
question of like, can they the worry is the Senate, right?
Sure.
Because
Sure.
they're the ones that are less on board.
Right.
If they're as good as the House, maybe we can get through this faster. But the Senate, Mitch McConnell, blah blah blah, it's their problem.
Okay, so maybe we skirt it, maybe we don't. So you're kind of in the same boat I am. I haven't made a final call on that yet. Because there's a rule in politics that you get your recession out of the way early. That's a rule of, now he doesn't get 2 terms, so he may not be thinking that way. He may have been like, I don't have time to have a recession. But typically what you say is get your recession out of the way early, and then now you're going to, run up, you're going to have a great economy coming out of that. And also Elon Musk's statement that there could be some pain. Because again, I trust Elon's judgment a lot with regard. Now, he did call the recession in 2023 that never happened. I guess you can't be perfect. I got that one right. Oh yeah, that's right. Okay, Brian, you were supposed to say that. You were supposed to say Randy.
Okay, so Randy, you got that right.
Anyway, so what about the stock market though? So the stock market is right out at okay, it's down 2% from its all-time highs right now. After 2 bad days, it's down 2% from its all-time highs. Most people think it's out way over its skis. Not most, a lot of people do. I think it'll be substantially higher by the end of the year. But I think there's a good chance that we could have at least a 5% pullback, maybe a 10. What do you think?
The thing is, if this was the only thing going on, right? They say, oh yeah, probably 10%, 15%, and then it comes back by the end of the year plus 10, you could make some kind of call like that. But we're in the midst of an AI revolution.
Oh yeah, that.
So that means, and then the AI revolution is really about the top 8, 10 stocks. It's
Yeah.
Tesla, it's Google, it's Amazon, it's Meta, it's Microsoft, it's Broadcom, it's TSMC. So if that goes well, because they're down at support levels, and so they can move up. Like we were at all-time highs with those, the top 7 down, and the top 7 make up like 35, 40% of the index.
I know.
Right?
I know.
So that's the kind of thing where the Mag 7, the Mag 10 or whatever could pull it all out, right? Because now AI is going great. So yes, the regular interest rate sensitive stocks or this or that or recessionary stocks, they would, we had the rolling recession where it hit, the Russell 2000, they got tanked, right? So same thing here. Right now, they got back up some. They could tank again, and then the Mag 7 could say we ignore this because we're in AI revolution, right? So that's the issue that it makes it tough to call the index.
Yeah. Yeah. Okay. So you're thinking that in the AI revolutionary, the elements of the AI revolution that would start putting a lot of earnings on the balance sheets of these companies could happen within that first, within the next 90 to 180 days to avert a sell-off on the market.
Right. There could be like, some, when we have the breakthrough with XAI Grok 3 being the best.
Right.
They're going to come up with Super Grok. They're going to come up with Grok Video. They're going to stick it into the car.
Yeah.
They're going to stick it into the bot. Figure AI said they're going to make some kind of super announcement on their human and bot. Some other human and bot companies are going to say that they're going to do some stuff. So there's all these things, like week after week, there could be new releases on the AI side, right?
Yeah.
And if that, makes some of the big stocks rip, right? Then the market can go down 10% everywhere else, but these guys go up 20,
right?
And then we're still at all-time highs.
All right. Okay. All right. Interesting. Well, given all that, let's take a look at what happened today. Of course, we don't have any pre-market on Friday night, but we can look at what already took place. And what we had was the Dow down 748. We had the NASDAQ down 438. We had this S&P down 104, and we had Tesla down 1660. Now, the important thing there is, did Tesla stay within its normal beta? And it did. The NASDAQ was down 2.2. Tesla was down 4.68. So 2 to 3%, 2 to 3 times is usually the beta on Tesla, and this was just barely over 2. So overall, not a great day if you're holding equities, but pretty normal for Tesla, given what happened. I mean, it wasn't
And
worse.
Tesla is sitting on, for the technical point of view, which people want me to
Yep.
give you,
Yep.
is sitting on support. So it
Right.
came down to the support level of 330.
Right.
So normally it holds support. Could it do a false breakdown through support? Yes. Could it do a real breakdown through support? Yes. But it is on support, which would tend to indicate it's a pretty strong support.
Mhm.
So you would expect a bounce. Maybe it's a dead cat bounce. Maybe it takes
Right.
you out.
Right.
But right now it's still there. So
Here's
um,
here's a question for you. Tesla's already well down from its recent all-time high. Let's say we do get a 5 or 10% correction. So the economy, I mean the rest of the stocks just do, they need to clean house. They need to clear out. And
yeah.
that happens, let's say, in the next couple of weeks. Like maybe we have a bad PCE, although we kind of already know what the PCE is going to say. So for whatever reason, the market just decides, okay, we really need to take a breather. Is there any chance that Tesla has already done it? Or do you think it's,
Yeah, Tesla has moved against the market. Like we did the move up from like 200 to 480. It wasn't like the rest of the market was
right,
was ripping that much. They had ripped some, but
right,
not as much.
right,
So it diverged from that, and we've gone down
mhm,
way more
right,
than the indexes were at the all-time highs.
right,
So if we were following the indexes, then we'd still be there, right? So uh, Tesla is going its own way.
right.
Um,
Okay, all right. The rest of the Magnificent Seven were all down. All of the Kathy Woods were down. So it was basically a down day, Brian. I mean, I think we can
yeah.
say. Now let's go take a look at the bonds because that is the key. And fortunately, we had a very good day on the bonds. We had a rally, and the rates came down 6.8 basis points on the 10-year to 4.431. So we're starting to make the move. I believe this is what's key. In my scenario, if we can get the bonds down under 4%, the recession will not happen. That's my scenario.
And basically, I think that is related to getting the peace deal with Russia.
Hmm.
If you do a peace deal with Russia, they're shipping natural gas back to Europe, etc. We don't have to ship them liquid natural gas. All the natural gas prices come down. That affects, as I said, the food prices. That affects
Right,
every product.
right,
Like practically every factory needs electricity, that's natural gas. They need chemical inputs, that's natural gas. So and then like I said, the fertilizer, they make the most fertilizer, they can ramp that up, back up, and then we have food for everyone else, blah, blah, blah. So that takes out inflation. That gives room for we would have zero inflation from even negative inflation from now to next year, right? Which Elon has said that should happen, right? In the interview with him at the White House. So that happens, interest rates can come way down, right? If I have zero, I'm way under two, we can go to down 200 basis points,
yeah,
right?
yeah,
So what happened with the market,
yeah.
as an expert,
Yes, that would be huge.
right? Right.
So oil, I missed it again. I
Mhm.
missed by a quarter. I don't like it when I miss I mean, come on now. So I said we'd be under 70 by the end of the week. We're at $70.25, coming
Mhm.
down $2.23 today.
Right.
So this would also, of course, be a great help to getting prices to come down. And I'm going to tell you, Brian, what I try to do now, and I'm going to really start hammering all my co-hosts. I'm going to start calling inflation inflation and prices prices.
Okay.
So the price action on oil will help the prices of what we spend at the grocery store. The price action of natural gas will help what we pay at the inflation is only productivity and and government spending. Those are the only two places that we really have inflation. And I know that nobody's ever going to get that.
Mhm.
It doesn't matter how many times I say it, but I'm gonna at least try to be consistent in doing that because I do the same thing. You think
Mhm.
you go to the grocery store and you pay more for eggs. That's inflation. That's not inflation. That's price.
Mhm. Right.
So,
And
so,
that was like killing 100 million chickens because they had bird flu.
right, exactly, exactly. All right. So let's see here. Let's go to where I closed my thing. Oh man, I really blew it. What did I do here? I can't even get it back open now. I've really, I've really messed up. I have no idea what I just did with that app. Well, it's just completely gone. I don't have any idea. Oh, here we go. I got it. Okay. Sorry, folks. All right. So we've got natural gas actually up. It had come way down though. So it's bouncing back up a little more, up to $2, 2.53%. Gold down 650, but still thinking about its run. I said it. Larry's saying it's going to go over 300. I mean, I'm sorry,
3,000.
3,000.
3,000.
You think it's going to go over 3,000?
Yeah, probably can go to 3,000, especially because you know, gold going up is basically a long-term devaluation of the dollar, right? It's the long-term, all the long-term debt we have is, when we do well against other currencies, it's just because we're the tallest midget.
Right.
Gold is a fixed point. So basically, the fact has gone up 10 times since the 70s, right, is because the value of our money
Has gone down.
and all other assets, houses, everything is down 10 times. Like, you could have $1 million home now, but that was a $100,000 home in the 1970s. It's because those things, gold, houses, that stayed the same.
Right.
It's just the dollar
Got
became a peso without you knowing it.
it. Okay. And silver down a little bit, down 2%, and copper also down 1.65% today. Um, so Larry likes to think of copper as the canary in the coal mine. And he doubled down on that on Monday, even when I challenged him and said, well, the copper thing right now is being heavily driven by this massive need for copper to build out these
AI
data.
data centers, power, and look at that.
So do you think that we should still use copper as our canary, or do you think it's being going to be hyper sensitive to this build out?
I would say we probably need to ask Grok 3 that and to
Okay, good idea.
so
Good idea.
and ask about the timing about stuff. Like, 'cause there's a bunch of moving parts to that question,
Yeah,
right? So it's a question of like, so same thing for like my saying that natural gas will go down when Russia gets back in. Like they're going to add in, say 20% more supply, blah blah blah.
right.
But because you have this countervailing effect of an AI revolution data center boom, where you're going to, Tesla makes their 1 gigawatt, we add in 10 gigawatts, 20 gigawatts, so there's this other action that's increasing the demand,
Mhm.
right? So, and then the timing is what matters. So if I get in balance of the things, then commodity of copper, natural gas would then fluctuate based upon what's going on. So to map that out in detail, one, you need a lot of extra information to know how that plays out.
Okay. All right. And then finally, we've got the Bitcoin, which had been rushing up towards 100,000, coming well down again today, 2,170 off at it's 2.21%, ending at, well, not ending because it's still continuing, but 96,393 right now. Any thoughts on Bitcoin?
So
Everybody
that
think
goes to, the devaluing of the dollar. So
dollar also.
Bitcoin is this alternative thing, although Bitcoin can sometimes act like a big tech stock,
Right.
right? But it's basically then that um, if the overall currency continues to devalue, and if you had some other crisis shift, then Bitcoin becomes more valuable. The other part of it would be that um, Bitcoin can also be used to make certain financial transactions more efficient.
Mhm.
That's the bull case from the
Right.
Sailor guy who his last name Sailor, I think,
Right.
who's CEO of MicroStrategy, who's bet big into Bitcoin, where he says that things like um, setting up some kind of fund or whatever some complex financial transaction that would cost an IPO, $100,000, $1 million, all that kind of stuff, that you can do a um, cryptocurrency, crypto blockchain finance form of that could make things more efficient. right?
Right.
Part of doing the Doge thing is that we can put all of the um, transactions of the federal government onto blockchain
Right.
and make them public. So then $30 billion worth of audits and accounting can go away. So you can make all this efficiency, but then that would be a demand onto maybe a coin, right?
Right.
Maybe
Right.
it's Bitcoin, maybe it's Solar or whatever. You would then and then they want to make um, a cryptocurrency reserve, right?
Right.
They said that they would
Right.
do that.
Right.
That would take, I think, an act of Congress to do that, but that is in discussions to make that move. So there's a bunch of things where you would see more demand, making government more efficient,
Mhm.
relying on um, possibly Bitcoin, blockchain, all those technologies in some form, which would then have a huge demand, and then making a reserve currency of that.
Mhm. Mhm.
Million coin, 2 million coins. If the US buys 2 million coin,
Yeah.
right, 2 million Bitcoin, then Bitcoin goes to 200,000. And then if the US has done it, then
Countries.
what does the UK do? What does India do? What does, if they all do it, then we have the bull case scenario that the Bitcoin people have been saying for like 20, 30 years,
Sure. Sure. Sure.
right?
Yeah. Yeah.
And then you get to Kathy was saying, Bitcoin a million in
Right.
5 years,
Right.
right? So this is in play,
Mhm. Mhm.
right?
Yeah.
So again, the fluctuations is like, you know, the bull scenario can happen, right?
Right.
And there's reasons for it, right? But it still hasn't happened. So
Right. There's still
but I'm of the belief that it is more likely to happen in some form. So
Mhm.
over under, 150, 200,000, on Bitcoin by the end of the year, right?
Right.
Within 3 years, if not Kathy with the million, you know, 250 to 500K,
Got
right?
it.
Those seem reasonable, right?
Mhm.
But based on these scenarios happening,
Sure. Sure.
right?
Sure.
So those are the things you would look for to say, is that happening, right? Not investment advice.
Not investment advice. Okay. Brian, as always, thank you for coming on, and especially this time at the last minute.
Yeah.
You will be visiting with me again. We'll have a show tomorrow sometime. Not sure
Right.
whether it be the morning show or the late at night show, but there will be a very special,
Yeah.
uh, visionary, futuristic look at
The
some
secret of the future of AI.
the secret of the future of AI.
Right.
So
And XAI and Tesla and yeah,
XAI and Tesla, it all comes together.
all
So
come
if you want
together.
to, if you want to learn about that, make sure that you pay attention tomorrow, set your notifications, and
Yeah.
we'll be doing that tomorrow. You should also follow Brian on Next Big Future and and his blog, Next Big
And
Future,
my YouTube channel and
and
my
his YouTube channel.
yeah.
But it's nextbigfuture.com is
Yeah.
the blog. All right, Brian. Great. Thank you so much again. And to
Thank
all
you.
of you out there, it has been great talking to you.